Hello guys and welcome to another video. I'm back with another video on the monthly series of stocks to watch this month. Last month I did kind of a quarterly overview of the performance of the stocks that I picked since May. For today's video, I will do an overview of the stocks that I picked last month since I'm waiting for the quarter to end to do another quarterly overview. And obviously I will talk about the stocks I'm watching this month. Please smash that like button and subscribe since it really helps my channel out. The first stock I talked about last month was Lyft. The stock is down 1.65% in a month and I'm still down over 10% in my position since I started buying in February when the stock was at $45 per share and started to average down in March and then in August. I still like this stock for the long term because of the huge growth potential it offers since they are only available in 2 countries in comparison to their competitor Uber that is available in over 100 countries. Obviously, they are still getting hit by the pandemic but have started seeing a huge uptick in rides since July. Take into consideration that there is still tension in the stock because of the situation with California, but I think that in the long term, it still have huge potential. The second stock I talk about is Lemonade. The stock is down 3.8% in the month. I have posted 2 videos already talking about this company. I think that this company is very innovative and if it does everything right, it has huge growth potential as well since it is disrupting one of the biggest and more stable industry, which is the insurance industry. Obviously, they are still making some mistakes mainly with their AI technology since they are brand new and still need to collect more and more data. But if they are able to continue improving month over month and year over year, I believe it could be a huge company in the industry. I added more to my position this week and is a stock that I will constantly increase my position month over month if it is at a good price and nothing changes. The last stock I talked about in August was Google. The stock right now is at all-time high. It is up 15.85% in a month, which is huge. This is kind of a stock that I just like to buy and hold for the long term. As I said 2 weeks ago, stocks like Google, Apple, Amazon, Facebook, Netflix, and Microsoft are stocks that I will always see as stable stock, but that also offers good potential. They have been around for years and years and keep innovating their business even more. They are huge and very strong companies that do not see them disappearing anytime soon. Obviously, right now, some of them have a rich valuation and might not want to buy at this point, but in my opinion, in the long term, they will continue growing and giving us a good return. Let's get started with the video and the list of stocks for this month. The first stock I'm watching this month is Intuit. Ticker symbol INTU. As many of you may already know, Intuit is a financial software company that has a lot of different products that help people, small businesses, and accountants with finance, accounting, and tax preparation. They own QuickBooks, which is a software mainly for small businesses to help them track their financials, income, and expenses. Then they own TurboTax, which helps people prepare and file their taxes. They also own an app called Mint, which is an excellent finance app that helps you track your expenses, create budgets, check your credit score, be aware of your bills or credit card balances, and more. This is an app that I personally use every day. I have all my debit card and credit cards linked with it and have actually helped me a lot to track my expenses and see where I have to improve. It is an app that I recommend to any of you that would like to start taking care of your financials. They also own Credit Karma, which has been around for a while now, but they just acquired it this year. Credit Karma is another app that could help you find and compare credit cards, auto loans, personal loans, home loans, insurances, and also have an in-depth analysis of your credit score, and you could even file your taxes as well with the app. Intuit is a company that has been around for 37 years and has always found out the way to continue innovating their business to be able to continue growing and providing up-to-date services to their customers. What I like the most about their business is literally this. They know what are the things that will help them continue exponentially growing their business. In their presentation, they talked about their AI or artificial intelligence applied in their products, the rise of omnichannel commerce, moving their business to a cloud-based software, and the most important thing is their free consumer finance platforms such as Credit Karma, TurboTax, or Mint. Also, Intuit is a company that has been expanding globally to continue growing. Their customer growth in the US is 25%, but in the UK is 78%, Canada 48%, Australia 39%, Brazil 47%, India 42%, and France 143%. Right now, Intuit is trading at a price of $347.47 per share and has a market cap of $90.97 billion. Their fiscal year 2020 already ended, and as you can see, their revenue has been increasing year over year. This year, they reported a revenue of $7.68 billion, which is an increase of 13.2% year over year. They also reported an increase of 17.3% in net income, which is also really good. In their balance sheet, we can see that their cash and cash equivalent massively grew by 157%, and their total assets almost 74%, but their short-term and long-term debt massively increased as well. Still, if we add up all their short and long-term debt and then divide that total by their total assets, we would get a total debt to asset ratio of 0.3, which is really good. Intuit has a dividend of 0.67% with a payout ratio of 34%. Obviously, their dividend is not as high as the market median, but I think that it is still nice for this type of company. I like this company mainly because their products and services are something that individuals and businesses use a lot to track and control their financials. QuickBooks is leading in small businesses financial management here in the US, but obviously has some competition around the world. We have to take into consideration that the pandemic has affected mainly small businesses, and that could affect Intuit revenue growth. Also, you have to know that their business is seasonal. As you can see, their revenue is higher during the second and the third quarter due to tax season, but overall the company is impressive. It's always trying to innovate and be up to date with their services, and even though their business could get affected due to COVID, in the long term I see good return for the company. I know that Intuit is at all-time high, and that is why this is a stock that I'm watching for now and see if we can get any kind of correction to start a position. In this chart, we can see that analysts are expecting the stock to either go down by 24.5% or continue its uptrend for an extra 18.4% growth within the next 12 months. The next company in this list is Intel, ticker symbol INTC. I think you all know that Intel is a semiconductor chip manufacturer company. The stock has been having a really tough moment here, mainly because of their latest earnings and because they announced that their 7 nanometer chip will be delayed and investors were waiting for it to be released. Intel is the leader in different segments that they play in. I think that they only need to get back on track to where they used to be, fix things and don't delay any product again, and then after that it might be one of the favorite companies again, and that is mainly why I think it is a good buy right now. Intel is a company that has been having a nice growth in revenue year over year, sometimes slowing down and other times accelerating. Last quarter they reported a revenue of $19.7 billion, which is an increase of almost 20% year over year, and a net income increase of 22.2% year over year. Intel has a healthy balance sheet with a current ratio of 1.97 and a total liabilities to total asset ratio of 0.46. If you're new to my channel, it is important to know that I consider a good current ratio if it is above 1.3 to 1.5 and an excellent total liabilities to total asset ratio below 0.5, since it means that their balance sheet is healthy and that the company knows how to manage money very well. Intel also offers a dividend of 2.53% with a payout ratio of 24%, which is huge since it gives them a lot of room to continue increasing their dividend yield. In my opinion, Intel is an excellent company and very stable company that could help me diversify a little bit more my portfolio. Again, if they are able to fix everything and get back to normal and don't delay anything else, I think that buying at current prices is actually an excellent investment for the long term. What do you think about this stock? Have you ever invested in it, or are you planning to start a position? Let me know in the comment section below. My last company in this list is a stock that I've been tracking a lot lately, and even more since the members in my free Discord group chat, link down below in the description, are talking a lot about it every day. This company is called Rocket Company, ticker symbol RKT. This is a stock that I will do a more in-depth video analyzing their business and financials, but wanted to add it to this list since I think it is a good investment as well for the long term. Rocket stock is trading at a price of $26.90 per share and is actually down 14% today. It is a mortgage lending company that has been growing consistently year over year. What I like the most about this company is that they are big players in the mortgage industry and are turning mortgages more into an online-based process that I think will definitely attract a lot of people. It is not a secret that the real estate market has been booming this year, even with the virus, and we are facing a strong mortgage market with low interest rates, with tons of new loans and refinances. Again, I will do a more in-depth analysis video about this stock in the next week, either Tuesday or Thursday. So if you are interested in that, definitely subscribe and turn the notification bell so you can get alerted when I post the video. Hope you enjoyed the video. Remember that you can get 2 free stocks with WeBull after opening your account and depositing $100. One of 2 free stocks could be worth up to $1,400. The link for that is down below in the description. Please smash that like button and subscribe since it really helps my channel out. Thank you and see you next time.